Hello, and on this episode of the Mortgage and Protection Podcast, Paul is back from Henchurch Lane, this time to explain how getting a mortgage works if you are self-employed with 2 years accounts. It's great to chat with you as always, Paul. How's it all going?
Going very well, thank you, Tessa. How's things your end?
Good, I'm glad to hear that. Yes, not too bad, thank you. Now it's cooled down a little bit.
Well, apparently it has where you are. It's still, I mean, you can tell
Oh,
by the
yeah,
shine on my forehead that it's not quite cool enough yet, but we're getting there for sure.
we
Can't
are.
complain though, it's lovely, isn't it? It really is.
This is the thing. We complain if it's hot, we complain if it's cold, don't we? And that is at the time of recording this, if you're wondering, in July 2025. Let's get straight into the questions that we've got here then. So, first
Okay.
of all, of course, we'll start here. Do mortgage lenders accept self employed applicants with only 2 years of accounts?
Yes, they do. Actually, that's the most common approach when lenders are looking to assess self-employed affordability. The likelihood is, if you were to look at 10 lenders, seven of them would look at the last 2 years and not the latest year in isolation or the 3 years, which some lenders can look at. Yeah, so latest two is the most common.
Right, okay. It would be a short episode, actually, wouldn't it, if the answer was sort of no there? So
Yeah, it would be
we'll
a very short question at least. Yeah.
It would, yeah. Let's follow on with the next two questions here then. So, is 2 years of self employed income considered enough for most lenders? You touched on it there. And will I need to have two full trading years, or is parts of a year acceptable?
So it's a good question, actually.
Mm,
You can use a part year when you're looking at self-employment. Now, what most lenders will use a part year for is rather than looking to derive, let's say, an affordability amount. So let's say you've got £50,000 for 6 months. They're not likely to say, okay, well, that means we'll use £100,000 because you'll have double that. They won't do that. But what they will do is look at the previous year and use the part year to justify that the previous year is sustainable. So let's say they looked at last year and actually you did earn £100,000. That would make them more comfortable to use that £100,000. If you
mm.
gave them half a year and it was £25,000, they would be less inclined to agree to the latest year being that accurate. So it's almost like you're using it as an additional little bit of a supplementary bit of evidence to help it get over the line.
Mm. Right, okay. So that makes sense there. And we might have some crossover with some of the questions that we cover, but let's see what we've got next. So, are there mortgage lenders who will accept less than 2 years of accounts?
Okay, so mortgage lenders would accept less. So would they accept 1 year? Yeah.
Mm.
You can get a mortgage with one set of accounts, and there are some, I would say, caveats or restrictions to that. There's only a handful of lenders actually that would be comfortable with looking at people that have only been trading for 1 year. But we do that quite frequently because that's our speciality, that's our niche, I would say. We do it all the time, but yeah, you're working with a very limited amount of lenders, so everything else needs to look good. Credit needs to be good, affordability needs to be there, and your conduct and stuff like that. But you certainly can secure a mortgage with one set of accounts.
Okay, so hopefully that does sound reassuring there. And yes, I think we've probably covered that on other episodes, haven't we? Previous episodes,
Yes.
but it's good to cover it again. Let's move on then to this question. So, are specialist lenders a better option with only 2 years of accounts?
Possibly, but it's probably not going to be because of the fact that you have two sets of accounts. Um, like I mentioned previously in the previous questions, the majority of the market would actually take that approach. So, that's not, I would say, unusual for people to secure a mortgage with two sets of accounts. If you do need to go to a specialist lender because of another reason, then it could be a good idea. But the devil's really going to be in the detail with that choice and with that recommendation from a broker. If you're if someone is suggesting to you you should be using a specialist lender purely because you've got two sets of accounts, then they don't know what they're talking about. Sorry.
Okay, so something to note there then, a point to note.
Absolutely.
Let's move on. So, what if my second year shows lower profits than the first? Should my income be increasing, or is fluctuating, sorry, income acceptable?
Okay, so fluctuating income isn't a problem, as long as it comes with some sort of rationale. And in all fairness, it's quite common with self-employment. People's income is up and down, whether or not it's because they have seasonal work or whether because of market conditions.
Mm.
Reasons beyond your control within business are going to impact your profits to some degree. So it's not always a straight upwards trajectory. So if your income is lower this year than it was the previous year, then the lender will take the most recent year, so the lower figure. An example would be if you earned £100,000 last year and 50 this year, they would take 50.
Mm.
But actually, if it was the other way around and it went 50 then to 100, they might average that out, or some lenders might even be inclined to take 100 if you give them a part year to justify the next bit.
Right.
So yeah, if it is on a downward trend, they'll take the most recent year as the figure to pop into the calculator. So that's what you'd be stuck with at that point.
Okay, so that explains that there. Hopefully, that's clear. People would also like to know then, can I include other income sources? Will I be assessed on net profit, gross income, or dividends?
Okay, so you can use other income. Yes, if you're self-employed, you'll need to submit something that's called an SA 302. It's a tax return, basically, that will produce a document called an SA 302 or a tax calculation. And all of your income from all sources will be listed, and you'll be able to put those incomes towards your affordability. Depending on what lender you go to, some will take all of them, some will take some of them, but you could potentially put all of them towards your affordability. So let's say if you was a sole trader, you'd be using the profit from self-employment on that document. And that is
Mm.
effectively your turnover minus your expenses. So let's say you turned over £100,000, it cost you £20,000 worth of expenses to run that year. You would then have a profit from self-employment of £80,000. And that's the figure that they would use
Mm.
for the affordability calculator. If you're a limited company director, you're going to be able to use a combination of your salary and your dividends, which is very similar to the income that you pay yourself as a sole trader, the profit from self-employment.
Mm.
But there is a separate approach which will allow you to use a combination of your salary plus the share of the net profits in your business. So if you're a 100% shareholder and the net profit in your business was £100,000, you could add that to your salary. That might be 110. Now, if that figure is bigger than your salary plus your dividends, then that might be an approach you might want to take. And on
Mm.
top of that, if you do have things like rental profits or income other than that on that document, you can add those things to the top of that figure as well.
Right, so that's useful to know there. That's good news. Okay, so the next question here asks, do I need an accountant to prepare or certify my accounts?
So if you're a limited company, I would say it's a good idea to have an accountant,
Mm.
but it's not essential. In my experience, there are a couple,
Mm.
not lots, there are a couple of lenders who would look at limited company accounts that are being processed by the applicant. Like I say, not a great idea personally. I would advise you to have an accountant, but if you didn't, for whatever reason, let's say you've got history in the industry and you're quite happy to do your own accounts, then there would be a lender. What's it? Sorry, there's just been some really loud motorbikes going past the office. Don't know if that comes through.
Didn't catch it,
Um,
no.
did
No,
it not? Okay, it's
no,
really loud.
no. Oh.
Yeah, so a couple of lenders out there. So if you really want to restrict yourself to a couple of lenders, as a self-employed person, if there's any other issues at all, it's going to be really difficult to place that business. So definitely advisable to have an accountant if you're a limited company. If you're a sole trader, it's not a problem at all if you haven't got an accountant, and it's relatively straightforward to submit them to HMRC without having that expertise as well. So it's
Mm.
completely your choice in that instance, I'd say.
Right, okay, there we go. So it really does depend on if you're a sole trader, limited company director. So hopefully that explains that there. Now, Paul, we know that preparation is key, don't we? So
Yes.
what documents do I need to apply for a mortgage with 2 years of self-employed accounts? Are personal and business bank statements required?
Okay. So let's just go from top to bottom. I'll tell you exactly what the bare minimum would be for packaging documents if you were a self-employed person.
Mm.
So at the very least, you're going to need to come to the table with, and this could be expanded on to threefold once you put the application in, depending on your situation and what the underwriter wants. But the very minimum, a broker or a mortgage lender would ask you for company accounts. If you do have a limited company, that's going to be something that they ask you for. But if you don't have a limited company and you're just a sole trader, it's just going to be the remaining documents, which are tax calculations, which we touched on earlier,
Mm.
aka SA 302s. You're going to need corresponding tax year overview documents. They kind of come hand in hand with your tax calculations. I look at one as a bill and one as a receipt for your tax.
Mm.
Corresponding personal and business bank statements. So I say corresponding, the latest 3 months really is what you're going to need as a minimum for personal and business. So some people have business accounts even if they're a sole trader. You definitely will have a business account if you're a limited company. And then you're going to also need to show your personal bank statements where you pay yourself the income going into that account.
Mm.
And then at the bottom of that list, you're going to be looking at things like ID, your name and address proof and stuff like that, any deposit proof. And then it's going to be coming more specific to your actual case. That should really be able to get you at least to submission on a mortgage application as a self-employed applicant.
Okay, so there's the breakdown then when it comes to the documents and what you need to have ready. So we've got 4 questions left for this episode. Moving on, and this is always a popular question, but in this case, and I'm not sure if it does make a difference, how much deposit do I need if I only have 2 years of accounts?
Okay, how much deposit do you need? I would say the minute you've got 5%, start having conversations. Or when
Mm.
5% looks like it's on the horizon, you can get a mortgage with 5% as a self-employed person. It's at that point really that you should start discussing your options. It could quite easily be possible at that stage.
Mm. That's good news then. There we go. So just following on from that question then, can I still get a high loan to value or LTV mortgage as someone with 2 years accounts?
90 or 95%, that would be
Mm.
classed as high loan to value.
Yeah,
Obviously, previously answered it was the other way around, wasn't it?
it
What deposit
was.
do I need
Yeah.
this time to get high loan to value? Very similar question. Obviously, it's just been asked in a slightly different manner. So,
Mm.
you absolutely can go up to 95% as a self-employed applicant with 1 year's worth of accounts as well. So, yeah, it's not really too different than being an employed person. Once you've got that one set of accounts, they've got a figure to work with. If you
Mm.
can afford the mortgage that you need, if you've got decent enough credit and you've got 5%, at that point you really should be exploring your options with someone.
Okay, so hopefully that is clear there now. Yes, sorry, there was some crossover there. I didn't realise until we was reading that question out, actually, Paul. But hopefully that's
All right,
helpful.
I'll pull you out on it, don't you worry.
There we go. That's a good thing. That's a good thing. But it doesn't harm, does it, to read
No, it doesn't. And
more?
if people are googling that question, you're going to get two schools of people. Someone looking at
Exactly.
how big the deposit be, the other person
Mm.
looking at how big a loan they can get. It's
Yeah,
the same thing, just asked in a slightly different way.
very true. Well, there we go. So 2 questions left. The next one here asks, will my credit score impact my eligibility more because I'm self-employed?
Okay, so that's a very layered question, believe it
Mm.
or not. Not much in the mortgage industry is a straightforward answer, but I would say no, it doesn't really have an impact on whether or not you can get a mortgage just because you're self-employed. What I will say is your credit score is probably the biggest factor when it comes to getting any kind of credit, especially a mortgage. So that
Mm.
should be something that you're paying attention to all the time. But don't think because you're self-employed, if you've got a slightly less than perfect score, that it's going to be kind of, a double whammy for an underwriter. It's not.
Mm.
You will still have options just as much as anybody else that wasn't self-employed. So don't panic.
Okay, well, hopefully that sounds reassuring there then to anybody listening to this, watching this. And just lastly, then, a great question to end on for you, Paul. So, is it better to go through a mortgage broker for a self employed mortgage? And anything else to add here when it comes to having 2 years accounts as well?
Is it better to go through a mortgage broker for a self-employed mortgage?
Mm.
Okay, I'll be honest with you. I find quite frequently even mortgage brokers struggling with these kinds of cases
Right.
purely because they aren't experienced enough in that field. So if someone who's done hundreds of mortgage applications can still find it very difficult to place these kind of cases, I would suggest it's worth not only finding a mortgage broker for your application, but finding one that actually knows about self-employed mortgages,
Mm.
because they can be very, very difficult. And if someone's experienced in something that's very, very difficult, they'll make it look very easy. But certainly don't try and do a self-employed mortgage by yourself. Don't try and do many mortgages by yourself. In my opinion, I don't understand why anybody would think it was, a walk in the park, because people
Mm.
don't easily part with hundreds of thousands of pounds without making sure that you're gonna have to jump through some hoops before you get it. So make sure you're speaking to someone who knows what they're talking about, and you'll find it much easier, I can assure you.
Okay, so something to definitely bear in mind there. Thank you ever so much for that, Paul, as always. Hopefully, that has proved useful to anyone listening to this, and we'll catch you on the next episode.
Sounds good, Tessa. I look forward to speaking to you soon.